Good morning, everyone. Thank you for joining us today. We are really excited for the topic ahead. My name is Zach Hurst. I'm with the Trust Company of Tennessee. Alongside me on the screen, you'll see Chad Scholart, a colleague of mine at the Trust Company. For those of you in the state who don't know us, we are a Knoxville-based firm with offices in Chattanooga and Johnson City, and focus really on three areas of business, and that is retirement plan services, obviously based on this, also trust services and wealth management. Chad and I really focus on the retirement plan side, and we're excited to bring in a very special guest for this to educate all of us, including the two of us, a little bit more on the DOL and what they focus on in terms of audits and how we can try to prepare and, better yet, avoid those. Before I introduce our speaker for this, I want to point out a couple of things. Number one, we are offering CE credit through SHRM for this. I was told by Art over at SHRM that all of you know how to do this and how this process works, but if you have any questions about it, reach out afterwards. I'm happy to walk you through that. And he also asked me to remind you that you have to stay till the end, of course, to receive that. So let me bring in Kim Cangelosi. Kim has significant experience in the retirement plan industry. She has spent her entire career in this field. She's currently with Waddell & Reed in the great state of Kansas. Personally, she and her husband have twin daughters at the University of Kansas, Rock Chalk. I believe that's a buy one, get one free tuition if you have twins. Is that right, Kim?
Well, not exactly.
I wish. Yes, so she's had a remarkable career and continues to have one. But for this purpose, we're really going to focus in on her time spent with the DOL and educate us a little bit further on that. So before we start to jump in, a couple quick notes. Number one is you're going to see a questions box on your screen, and so feel free as we go to throw questions in, and we're going to plan to do a Q&A towards the end of this and answer as many of those as we can. And second, we're going to introduce a few poll questions throughout this and have a little fun and get some interaction going on with you, the audience. So I believe we're going to get started with question number one, and it's going to pop up in the next minute or two, second or two, I should say. Okay, so the question is, what do you fear most? And my screen is, my font is pretty tiny, but let me see if I can do this. Chad, correct me if I'm wrong. But what do you fear most? A DOL audit, a root canal, living with your in-laws, or flying during COVID? There is not an E, all of the above, by the way.
Yeah, so take a second and pick one, and we'll see what the results look like.
All right, Chad, I'm going to call on you. My font is too small. If you can tell us.
Yeah, so it looks like most people fear a DOL audit more than all the other things. So we weren't really sure what the. I thought it would be more evenly split, but it looks like DOL audit is up there. So maybe we can calm your fears a little bit through our presentation, but interesting results.
Exactly. Yeah, and to our clients out there, I will remind you that we are going to be in your corner for any of those audits. So I hope you didn't select that one as trustee on your plans. We certainly have that responsibility too. But thank you all for being here. I wish we could see you in face and in person, but the times are what they are. So Kim, we're going to jump into this. We've got a lot of HR professionals on this call, so I need to sort of, I guess, set the record straight that you have given me permission to ask this question and to talk about your experience.
Yes.
COVID-19 has been on our minds for the last 6 months. It's disrupted our world. It has just disrupted your world far more because you are now a COVID-19 survivor.
I am a COVID-19 survivor, and the funny thing is, I actually would have answered. I probably would have feared more of a wisdom tooth, but I have experienced almost all of those things, and the COVID-19, even experiencing it, I probably would have experienced feared that the most, even after experiencing it. I had COVID-19 pretty bad, lasted about 7 weeks. It was a good time for everybody. I was in the hospital, had the ventilator, had the whole thing going on. Had no idea where I was for most of it. It was a good time, and my family was just baffled by my experience because I just, it led into pneumonia because I had pulmonary embolisms, and then led into shingles, and I'm just kind of getting over that now. And it's kind of it is a ride. So you guys, after today, I guarantee that will shift, because we will ease your fears of any kind of Department of Labor audit issues, because you have a really good team on your hands with the trust company, because they're going to make sure that your audit issues are taken care of. And the COVID stuff, they're not going to be able to take care of so much unless they know something I don't know, because if they did, I would have been down there. But your answers are going to switch a little bit more and be more COVID related and less audit related, because that is going to be taken care of by them, and they're going to take care of that for you. So that I can promise you. So people ask me all the time, why did I join the Department of Labor? Like, why did I go to that dark side? You know, everybody says, you know, why did you join the Department of Labor and become an investigator? Because it is considered the dark side as a, you know, in this industry, as, you know, the person who comes in with the big, you know, sicket, is it a sicket and a hat, and you know, comes in as an investigator and goes through your plans and goes through everything. And, you know, they go through your retirement plan and looks for dirty little secrets and wants to find out what's going on and why would you want to do that. And that's not why I wanted to do it. Why I wanted to join the Department of Labor and the Employee Benefit Security Administration was more to help people, was more to help the plan sponsors who, you know, had plans that they didn't know what to do with, who had plans that they were terminating and they were done with and had no idea really what to do next with them. They had nowhere to go with them. For participants who were afraid to call the Department of Labor, they didn't want to tell on their plan sponsors because they were afraid they were going to get in trouble, but they had money that they didn't know where to go with, or they didn't get contributions on, or, you know, people that they felt that they were being taken advantage of. A lot of it was participant based because they didn't want to, you know, necessarily tell on their plan sponsors, but they wanted to get what was due theirs. So it was really helpful idea. They wanted to get in, and I wanted to get in and help the plan sponsors get in and help the participants do more, help more, clear up more of the plan sponsors of what they were doing. So that's really why I wanted to do that.
Kim,
Yes.
you're just to be clear, you were a retirement plan advisor, or you worked on the retirement plan side, you know, as a provider before you decided to go work for the DOL. So you had experience in retirement plans, and then, you know, you I guess were recruited by the DOL to come work for them.
I had worked in several different facets. I worked in operations for a large mutual fund company in the retirement group. I had worked for a regional account manager for a very large mutual fund company, and then I worked as an advisor. And they came to me and asked me if I would come help them because they were struggling with pricing. They didn't understand the idea of how do we price a plan? How do we understand if a plan is overpriced? How do we understand if a plan is underpriced? Because they would look at a plan and they would say, this plan is priced at 50 basis points. Is it overpriced or is it underpriced? And they didn't know. They truly didn't know. They would say, well, how do we know? And I would say, well, how many people are in the plan? How many services are being done for the plan? How many languages are being spoken in the plan? How many office visits are being done in the plan? How many, visits are being done? How many different offices do they expect a year? How many, are they expecting audit services? Are they expecting, there are all sorts of things that a company or an advisor or just the service provider does for a plan. And even more so now with 321 and 338 and 316 that an advisor can do for a plan that they couldn't do then, that really can determine a price.
Yeah, so that gives me another idea here from the standpoint of just the overall general purpose of the Department of Labor. What they obviously have a role in making sure that retirement plans are handled properly. So just in general, you talked about pricing, but just in general, what's the purpose of the Department of Labor? What's their role when it comes to overseeing retirement plans?
Well, they want to make sure that ERISA is followed. That's really their goal, is to make sure that ERISA is followed and make sure that the participants are given what they are supposed to be given, and that is that ERISA is followed to a T, and that the plan sponsors are treated fairly, the participants are treated fairly, because they're not only looking out that the participants are treated fairly by the plan sponsors, but that the plan sponsors are treated fairly by the advisors, that the advisors are treated fairly by the record keepers, that the record keepers and the plan sponsors and the participants are treated fairly by the administrators, and that everybody's being treated fairly and everybody has the best interest of the participants and the beneficiaries. And that really is the goal.
So it's really, when it really boils down to, is the participants and the beneficiaries making sure that they're being treated fairly and their money, it's not, we're all working to protect participants' money, and it's not our money, it's their money. So we have an obligation to make sure they're being handled properly. So I think that's a good thing to keep in mind, is that it's really about the participants and their beneficiaries. So I guess compare that to the IRS, because the IRS does have an interest in overseeing retirement plans as well, but the IRS is looking at it from a different angle, right?
They do look at it from a different angle. The Department of Labor is looking at it from a protection angle, and the IRS is looking at it from more of an angle of
tax or
taxes, fines.
Right.
They will fine you, they will tax you, they're looking to actually fine you. They're looking to tax you. They're looking to, when they come after you and they audit you, they will find a way to fine you or tax you or to make money off your plan. When the Department of Labor does come after you, usually you will not receive a fine or anything like that. You will hopefully, if you work with them, and we'll talk about how you work with them, if you work with them properly, and you can do that with the help of people like the trust company and people like quality advisors, you can work with them to the point where you won't get a fine, but you do have to work with them properly. The IRS is less willing to work with you on a proper basis. It's a little bit differently. It's a little bit different.
Makes sense. Kim, I wanted to jump into, I guess, probably based on the first poll results, maybe what we're all most interested in, which is how the DOL actually goes about selecting audits. I'm personally a little bit worried because the person being picked out of the lineup on the screen looks like me, so I don't know.
It is you.
Oh, okay, great, super. But yeah, if you could tell us a little bit more about how they is it systematic? Is it random? I mean, how do we try to
That is
avoid
a
these?
great question, Zach, because, you know, a lot of people want to know why me. You know, that's one of the first questions they ask when you select them, and they get the notification that it is them that has been selected as an audit participant. And the first and foremost, the number one reason that people get selected for an audit is one of their participants have called in, you know, with a question. And if they call in with a question, the department does an entire audit of the plan. So if a participant calls in and says, you know, we haven't received a contribution in our plan for the last 3 months, they will do an entire audit of that plan. Or even 2 weeks, we haven't received a contribution for 2 weeks, they will do an audit of that plan. So that will flag that audit. Also, flags come up systematically. If they do a late contribution flags, they have systems that run late contribution flags. So if you flag on your plan that you have late contributions, they will get flagged as a late contribution flag. So if you do a late contribution flag and you do the VCP, I think it is. I think it's a VCP. It's been a minute. If you do the VCP and you've corrected it already, you actually don't have to mark that again, or you can put a notification in there again that you've already corrected it. You don't have to mark that you still have a late outstanding contribution. And you have to make sure that you mark that it's not outstanding anymore because you've corrected it.
And you're
Because
talking
otherwise
about
it will come up.
on the 5500?
Right.
Yeah.
Because they
Gotcha.
run 5,500 reports that mark every 5,500 that still has an outstanding late contribution. They will be flagged and they will be audited. And the reason for that is because of the way that they're paid. And the way auditors are paid or investigators are paid are by points. And we're going to talk about this in a little while again, but they're paid by points. And an investigator has 20 points per plan that they can get paid by. And points are money. So if you get a money transaction, you get 20 points. If you get an amendment issue, like they didn't update their GUST amendment from 20 years ago, they get 3 points for that. Or they didn't update their any other type of amendment, they get 3 points for that. Well, that auditor has to get to 300 points by the end of the year. So if they're going to get to 300 points by the end of the year, which one do you think that they're going to get to as quickly as possible? Well, they're going to get to the money points as quickly as possible. So they're going to always look for a systematic reason to find a money transaction to do that distribution or to do that transaction, to find that transaction that is a money transaction. And when they
So
find
that
that
would
money
be,
transaction,
so like a late contribution would be an example of that. Yeah.
absolutely, a late contribution or a late distribution or any kind of late any kind of money in or out. Any kind of money in or out of the plan will cause a money contribution, and that person will get 20 points for that transaction. And so that will give them 20 points for that, that entire amount. And so that entire amount will give them 20 points for that investigation, therefore done.
Right.
They'll usually close the
On to the next.
investigation and they'll move on to the next one. The next reason that DOL selects audits is random. And I'll be honest with you, yes, they are random. If I am going to, if I'm going down to Knoxville, Tennessee, and I have to be there for 2 weeks, and when you travel for the DOL, you're going to have to travel for 2 weeks. You have to do 2 weeks there. And if I have a plan that I have to audit for 2 weeks because a flag came up, or because I'm working on a plan that a participant called in, I'm going to have to do maybe 7 audits while I'm there. Well, while I'm there, I have to find 7 audits while I'm there. Well, to find 7 audits while I'm there, I have to look up 7 plans that have active audits while I'm there. Well, while I'm looking for 7 audits while I'm there, I'm going to try to find 7 money audits while I'm there, because I'm not going to try to waste my time on an audit that doesn't have money while I'm there. So I'm going to look for 7 audits that are worth my time when I go down there. So they're random pretty much, but they're worth my while.
So let's roll into if you're a lucky person to get one of those either random or selected audits, you know, how you find out. And so we've got a sample letter here that just shows you what a DOL letter looks like, and this is kind of the format that they use. And so talk a little bit about when a letter's sent out, and you know how they notify you, and maybe even some of the scams that are out there, which is unfortunate, but that there would be somebody scamming plan sponsors. But yeah, go ahead.
I can't believe people fall for these things, but they do. Myself being one of them, I'll be honest with you. But you will only be notified via letter that you are being audited by the Department of Labor. You will never be called by somebody telling you that you are being audited by the IRS, by the Department of Labor, by anybody. So there will never be a scam. There will never be anybody calling you, telling you that that you will have to send them 50 iPod cards or 50 Google cards or 50 cards in Amazon cards in my case. I'll be honest with you. I received a call. I was at work and I had worked for the Department of Labor. I had just left. So you would think I'd be smart enough to know this, but I had just left and I received a call from the IRS. And they told me that I had a violation on my 2016 IRS audit, and that I owed them something like $400 or something, and I had to pay it today. Otherwise, I would they would put the cops would be at my office, my new job. So I was
Right.
embarrassed enough that I would have to get this taken care of. So what I did was and then I couldn't get off the phone with them. Scam number 1, you should know. So I literally had to get in my car, on the phone with them, drive to Walmart, buy, I bought $400 in, because that's all I had on me in cash, not in cash, but in my debit account, in Amazon cards that they had, and I was supposed to call them back. I was supposed to stay on the phone with them and read them the numbers and scratch off the numbers. And once you scratch off the numbers, you can't use them anywhere else. And they can use them. And they're using them as soon as you give them the numbers, as you're scratching them off, they're actually putting them in an account as you speak. Like, it's like immediately. And I got off the phone after the first one. I said, I'm not giving you any more of this information. This is ridiculous. This is not right. You know, like, I know this is wrong, you know, and I was, you know, telling them. And I knew deep down in my heart that the only way that you're notified is by a letter with this seal, with this Department of Labor seal, with this Department of IRS seal, with these seals on them, with
Right.
a letter. And they tell you, unfortunately, that you only have 10 business days to provide this information, but it does tell you, and it tells you that based on Title I of the Employer Retirement Income Act of 1974, blah, 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 and what you will be required to provide, that you should have this information for them, not money.
So we've got
I fell for it.
we've got a poll question here. So if you received an audit letter from the DOL, you would so click one of the things that you would do here. If you did get a DOL audit like the one we showed you, what would you do? Give you a few seconds to reply.
I'm curious to see if there's anybody who selects number one on this.
Yeah. We might get a few number ones.
It'd be a bit extreme.
Yep. So yeah, so I think it's important as we're getting these results just to remember how the process works. And you know, we've helped clients with DOL audits, and you know, they ask for specific information. And so yeah, good thing we didn't have anybody say.
Oh, thank goodness.
Good. So yeah, I think that's a great good. I'm glad to see this, because I would expect that your providers help you support you with this DOL audit if you were to get this letter, because you're going to need their help to gather the information. You know, if it's the trust company, if you're a client of the trust company, we're going to be gathering this information, organizing it. There are some things that you probably will need to gather for yourself, but whatever we can do to make it easy, we will. So one of the important things as we move into the next slide, so I think what we do for our clients that is, I think, really helpful is we actually gather all this information up, provide it to the auditor, the DOL investigator, and you know, on that initial appointment or whatever that looks like, we're going to be there either in person or provide it to them and go over the information with them so that they can clearly find what they need. But Zach, do you want to take this one?
Yeah, I just basically, Kim, want to know that once they receive this letter, and hopefully that doesn't happen, but I think for most companies at some point this might happen. What do we do? Right. What's the best thing for the plan sponsor to do, and who do they reach out to, and how do they go about this?
Well, the best thing to do is, you know, you have all the information, hopefully, especially if you've been working with the trust company, you have all the information that you need to help yourself get organized. You know, the best thing to do is to do exactly as they ask. They give you a list of information that they request. You put the information in the order, exactly in order that they ask you for it. And you have a big stack of information that they ask you for it. If they ask you for it in Jump Drive, you put it in Jump Drive. If they ask you for it in disk, which is less likely these days, you put it in disk, but most likely they either ask you for it in hard copy or Jump Drive. And then once you have it all ready for them, or even while you're putting it together for them, you call them and you introduce yourself to them and you let them know that you're working on the process and that you're, you're ready to work on it, and who they'd like to talk to and who they'd like to meet, and you schedule the interviews for them, and you get everything ready and help them be their liaison, because the more amicable you are with them, the more amicable they will be with you.
And I assume that this is not usually as simple as fill it out, send it back. There's probably some interview that's going to take place, correct?
Absolutely. There is.
Okay.
The interview is probably the largest part of the audit, because what happens here determines what happens everywhere else. When you're interviewing, they're going to interview everybody who touches the plan, from the CFO all the way to the person who does the contributions. And the reason for that is because each and every one of those people are part of that plan. And what they want to do is they're going to go over each question. First, they're going to try to make you comfortable. They're going to try to make you understand, who you are as part of that plan. They're going to try to make you, especially if they're doing it face to face, they're going to try to, do it in your office. Always try to do it in the conference room. But they're going to, say, oh, do you want to go to your office? And you say, no, we'll do it in the conference room. Because if you do it in your office, they're going to try to, relate to you to things in your office. So that's one tip for you. Detailed questions that you can expect are things like, tell me about the process that you do with the contributions. What happens the day you get paid? When do you enter the contributions? How do they get entered? When do you receive the money for the contributions? How do they get entered? Who does that? What is the backup procedure? What is your skill set for that? What is your process for alerting others if there's a problem? If for some reason the system goes down, what do you do then? Who's involved in this process? What if there's a distribution? Who does the distributions? What if there's a loan? What if there's a hardship? Who determines the hardships? Who determines the, any kind of fees associated with the plan? Who determines the funds associated with the plan? Who does all of that information? All of that should be known. And one of the biggest recommendations I have, and I can't stress this enough, is that everybody should get together before the investigator comes, including your trust company, including your advisor, and hopefully they can be one and the same, your TPA, your trustees, your anybody who touches the plan or could be considered a fiduciary. Get together and make sure that you have all of the information in conjunction with what you're going to say and what you're going to do, and make sure that everything is in line together, because you don't want one person saying one thing and another person saying another thing, and you don't want people saying, I don't know, and you don't want other people saying, well, this is how it's done. You just want everybody being in line with one another. And that is the biggest interview tip, is that everybody knows what everybody else is going to say. Because if you have 6 people who are going to speak to the Department of Labor, and everybody will speak individually, that you each and every one of you speak to the same subject and speak consistently and have a standard answer.
So the folks that are going to be, they're going to talk to, it could be the person that processes payroll, just in terms of the folks on this call, the plan sponsors on this call. It could be somebody that's processing payroll, the person that's on the committee. If you're dealing with hardships or anything like that, it could all be, those all could be people that are interviewed.
Absolutely. Anybody from the person who does, like you said, the contributions to the CFO, to the trust company, to the TPA, and any one of those people can be audited or, you know, interviewed, and you want to make sure the answers are the same.
Kim, you mentioned a backup process early on
Yes.
when we were talking about that. What is that?
Well, if somebody is doing the contributions for the plan and for some reason they're out, they get sick, what do you do if that person is out? So you have to have a backup process for that person. Or if somebody's doing the hardship distributions and that person is out, what do you do if that person is out? Because you don't want that hardship distribution just sitting in that person's inbox for 6 weeks. Like
Sure.
I was out for, you know, almost 7 weeks. There was people who did my job.
Yeah,
Because,
makes sense.
you don't want
And,
that COVID affecting, you know, the job.
or the pneumonia or whatever else came after that. But
The
yeah,
COVID, the pneumonia, and then everything else. So
but
you want to make sure that my work gets done, you know, first and foremost.
Yeah, and I think that goes back to what you said earlier. You know, this is really, it's about other people's money, right? So if you have somebody's
Exactly.
401k contribution not being sent to the trust and invested in a timely basis because somebody's on vacation, the Department of Labor really doesn't care, because it's not about their vacation, it's about the people's money who
Mhm.
they're handling. So having a backup and having a procedure and process is what they really care about.
so one question
Exactly.
from the audience, if you don't mind, just as a follow up on that, I think it's a good question. And the question is, what constitutes a late contribution? And I'd love to apply that to a scenario, Kim, where we're talking about this backup process, right? And so let's say that your payroll person is out sick for 3 days, right? When this is supposed to happen. So what does constitute a late contribution versus you got a little leniency here?
And that's when your interview comes in. If you're doing a contribution and every single day, every single week or every single, you know, biweekly, whatever your contribution is paid on a, you know, 2-day schedule, and it's always a 2-day schedule. And then all of a sudden she's out sick and it's a 5-day schedule. That would be considered a late contribution.
And that's 20
And so,
points.
and that would be 20 points.
Okay.
And so
So
you have to have somebody do that for her, or you have to, you know, do a VCP, or you have to, you know, make that contribution and pay the fine, not necessarily fine, but the interest for it, you know, and just get it done.
Yeah. And I think there's some confusion out there because there's an old rule about, you know, the 15th of the month following, which isn't really a thing. But the in my experience, what Department of Labor defines as late is, you know, the as soon as reasonably possible definition. Or administratively possible. And so if you demonstrate that you can do it in 2 days, then all of a sudden you do it in 5, then you're late. But another
Right.
company could consistently do it in 3, and then they do it in 5, and that's late. So it's really, the advice that we give to our clients is whatever you can do consistently and stick with it.
Right.
So do you agree with that?
Absolutely. And that's the purpose of the interview. And that's why they do the interview. And that's why they interview the way they do, because they want to find out what is the shortest amount of time that you can do the contributions. So if you can do them in 2 days and you do them in 2 days, they want to see them consistently in 2 days. If you can do them in 4 days, they want to see them consistently in 4 days. So consistently for you, maybe 4 days, but consistently for me, maybe 2 days. However, if you have under 100 participants, they will give you the the 5-day rule or 7-day business rule, they will give you up to 5 days to get them done without giving you a fine.
Yeah. And Kim, I had thrown this last one on the slide, just curious about this and thinking about, you know, as plan sponsors, they rely a lot upon people like us or whoever they're working with to really take charge and control this plan. So if they are audited, and one of the key things that we see maybe are funds, the internal fees of funds that are too high.
Yeah.
Who's that? I mean, is it the advisor that takes on that responsibility, or is it the plan sponsor or trustee? How does that work?
Well, it depends on your role as what you do. If you're an advisor, a commissioned advisor or a commissioned broker, then it's the trustee's role. If you're a 321 or a 338, then it's your role in conjunction with, if you're 321, it's your role in conjunction with the plan sponsor, TPA, trustee. But if you're a 338, then it's your role to determine which fees and what the funds are, and what's too high, what options, what red flags, and who's responsible. So it depends on what your role is. But if you're a 338, it's absolutely imperative that you understand that your role is essential, that you are, the buck stops here, so to speak.
So I think we've got a poll question here. Last poll question of our.
Uh-oh.
So if you were audited today, you got that letter in the mail. How prepared would you be? How prepared do you feel? So unprepared, we've got work to do. Decently prepared, some good areas, but others need improvement, or I think we're in good shape. Things are documented and running smoothly. And I think we're going to talk in a second about that, how important that documentation is, and you know, working with providers who, you know, have good documented processes, you know, making sure that you've got a committee in place, minutes, all that kind of stuff. So looks like most people feel like they're in pretty good shape, maybe some areas of improvement. But so anyway, this is good. 43% feel like they have a little bit of work, and then a large majority of 52% are in good shape. So that's good.
Well, we'd love to do more. So, you know, anytime you guys want us to do more, we can come back and do more detailed. Just ask Chad and we'd come back and do more for you, more detailed information.
Well, with that, you know, Kim, I think that maybe about half or so maybe feel like they have more work to do. So what's some of the proactive advice that you could give to them, or really to all of us, as it relates to these audits?
Well, understanding what the Department of Labor is after is basically making sure that you have your files in order, making sure that you have your information that you need, that you have all of your at your fingertips if needed, all your contributions for the last few years available to you if asked for them. Same goes for distributions and any kind of, they ask for any kind of amendments, any kind of changes made to the plan, any kind of, you know, anything that you've done to your plan, minutes, to your meetings, any kind of like annual contribution changes that you've made on an annual basis. Hopefully you're doing meetings, and on those meetings you have minutes. When you have those minutes, or you make a fund change, any of those things that you do, that's what the DOL wants to see each year. Any of those things, if you have available to you, I would keep them in a separate audit bucket. This way, when they come, you can just pull them down and avoid any, if a non-random audit comes, you can just pull them right down to a a jump drive and send them right out. And having a trustee makes a huge difference, because if you do not have a corporate trustee or a any kind of you know, trustee on your side, you could be left out in the cold, and you could be out there with the auditor trying to help you, and not every auditor is going to try to help you. Some of them are going to try to hurt you. Some of them are going to try to go after you in a different way. Every person's different. Every auditor is different. And, you know, there was a lot of people, you know, they're people too. So if you're kind to them, they'll be kind to you, but you do have to have the work. You do have to have the information to give to them. And if you have a good trustee on your side, and you have a good auditor on your side, you know, and you have a good trust company on your side, you're going to provide them with the information that they need in a clean, clear-cut manner. They're going to be so appreciative that you made their life so easy that they're going to make your life just as easy.
And when you
The
say
last-
minutes, I'm sorry, Chad, just a quick question on that. When you say minutes, I assume the DOL is still focused on having committees for 401k plans as opposed to just one person?
Oh, absolutely. They will prefer a committee over an individual any day, because they want committees to look over plans, even for 2-3 person plans, because there's, you know, trustees, there's advisors, there's TPAs, there's, you know, they even want trust committees on those plans, because they don't want people looking over their own funds.
Yep, got it.
So last
Chad?
thing here is just before we get into Q&A. So since COVID-19, I know you still have folks at the DOL that you're friends with or are still in touch with, but are you aware of any changes that can be relayed here in terms of how things are being handled now versus maybe 6 or 8 months ago?
Absolutely. I do talk to a lot of people that are at the DOL on a regular basis. They're friends, just coworkers, just like anywhere else. And you know, one of the big things that they're doing now, that they're doing a lot more audits now that than they ever have. And the main reason is because they're able to do video conferencing or telephone audits more so than they ever have before, and a lot less travel. Actually, their travel has come to a stop. So they're doing a lot more letters, requests for information via that jump drive. And the volume of the audits right now are extremely high. And so they're doing what they were doing, you know, maybe 10 to 12 audits in a period. They're doing now 20 to 25 audits in a period. They do have a pretty large office in the Southeast. So, so just know that. And they are growing that office. They did get a new person running that recruiting area. So just know that that's going on down there, and they're doing their best to not only, they want to protect, they don't want to nail participants. That's not their goal. They're not looking to go out there and go after plan sponsors. They're looking to help plan sponsors. They're looking to guide you. They're looking to help plan sponsors. They want to help in any way they can. It just doesn't feel like that all the time.
So Zach, have you got any good questions that have popped up?
I do. Let me
Okay.
switch back over here. So I tried to get this in on the slide, but couldn't quite squeeze it in. But the question is, if the plan is audited as a large plan filer, is it okay to have those in-person meetings at the CPA firm's office? So is that,
Actually,
can the plan
yes.
sponsor dictate, or, okay.
They don't like to do that. I'll be honest with you. They do not like to do that, but they will do it. They'll tell you it's not okay at first, but they will do it if pushed.
I think we've had situations where we have requested the DOL audit to be done in our office since we're trustee of our plans, and
Right.
they had been accommodating of that in the past. I don't know recently. We haven't had any questions lately, but they had been accommodating of that. And the reason that we would prefer that is just because we have access to 90% of the information they're looking for. We can get it right to them. So yeah, that's now the question was about a CPA firm, but as trustee of the plan, we request the same thing.
And you can you justify it in the same way that Chad's justifying it. If you have all the information at the CPA firm, I would go in the same direction as far as justification.
Okay. Great. And this one says, can you clarify what you said at the beginning, that if you have late contributions during the year, but rectify it before the end of the year, then you do not need to include it as a late contribution on the Form 5500?
I would say you do not have to include it on the form. Chad, do you agree with me on that?
I'm not sure. So I don't have an opinion there. I haven't heard that before, but that very well may be accurate. I would always check with your plan providers, and ultimately ERISA counsel, an ERISA attorney can certainly steer you in the right direction on your plan for that one.
Our entire compliance team is in the background on this call, and they are dying to answer, I'm sure, but didn't give them mic access.
Yeah, we did not force people to utilize to answer or to put them on there. We don't require them, and we don't if they call in and ask on the 800 line, do we have to put them on there? We do not require them if they've used the VCP program to do that. But if other people answer differently,
yeah, and
I'm not going to argue with them.
VCP is the voluntary compliance program, where basically you admit your mistake, file the information supporting it, and ask for forgiveness.
Yeah, it's a mea culpa, right?
Yep. What else, Zach?
One more question is a pretty interesting one. It says, Kim, what was the largest penalty or correction that resulted from your audit?
Oh, this is a good one. I moved over to the criminal side towards the end of my my leaving, and there was a fund called the FLTC1 fund, and it kept creating a fund that they filed with the SEC, and they got their red herring, and they went ahead and they corrected what they needed to correct, and then they went ahead and they filed the fund, and they collected money for the fund, and the fund was they did this 3 times, and they collected $50 million each time. And what they did was they went around to dentists in the South, through a bank in Texas, and they collected money, and they built barges, supposedly. And these barges were supposed to bring money or something over to the other side of the country, or the other side of the world. And one of the risks on the barges SEC form was that the piracy was a risk. And lo and behold, every single time piracy occurred 3 times. So that was $150 million. And finally, we kind of caught them. And what we made them do was they had to give all of the money back to all of the plan sponsors. And they had bundled the plan sponsors into balance forward plans. We had to unbundle them, make them individual plans, and take all of the money that was balanced forward and apply that towards the trustees' accounts, and all the participants got their money back, and the trustees were the only ones who were associated with that fund anymore. And so it was pretty hairy to unwind all of that, and it was
Yes.
pretty fun.
Yeah.
So this was, just to be clear, this was an investment that was being sold, and people were putting their plan assets in the investment that ended up being basically a fraud. And so, so yeah,
Well, the trustees were doing it for them.
gotcha.
So
Wow.
that was even worse. They didn't even have
Yeah.
a choice. They didn't even know about it.
Hmm.
So that was the scary part.
I wanted to point out one thing. We had a comment come in from one of the participants, and it's not somebody from our team, but I'm sure that this person is probably correct. It says late remittances are required to be reported, whether corrected or not. So that's from somebody on the call.
Okay. Okay.
Yeah. All right. Kim, wonderful as always, and we
Thank you.
greatly appreciate you being here. And it's as we talked about before this call, I think that it's really nice to have somebody who has the direct experience and contacts there to kind of keep us all abreast of what the trends are and how we can try to get away from these, or if they happen, take care of them appropriately. So thank you very much.
Thank you. It's been a pleasure. And if any of your people have any questions, they could contact me through chat or you or anybody again, and I'd be happy to answer any questions.
Great, perfect. Thank you. And Chad's info is on the screen, as is mine. We do have another CE credit coming up in September, so it'll be another hour-long session. More to come on that. We'll send the invite out. Sherm will send the invite out. Also, what we're doing here is we titled it the Retirement Plan Academy. Typically, it's designed to be just a quick 30-minute snapshot, current trends, what's happening. Let's all be better informed. So we'll continue to keep you keep in touch with you about these topics as well. So I think that's going to sum it up here. If you need something, certainly let us know. Chad, have I missed anything?
No, I think we're great.
All right. Thank you all for being here. We really appreciate it.
Thank you.
Bye-bye.
Bye.